Hello, everybody, and welcome back to the Crypto Economy Podcast. Today, I'm very excited. We're going to do something a little different. We are going to have a debate with these two fine fellows who would like to debate the point is runes dead? So, by the end of this, we'd love to hear which side you guys are on. Let them know on Twitter, tag them, give your opinion on the matter. But I think this is an exciting opportunity to hear two sides of an argument, and especially because these two fellows definitely know what they're talking about. They're people I've worked with for a while, so I'm very excited to introduce you guys to Jacob and Rafa. If you guys could maybe quickly introduce yourselves and maybe just give the audience a little bit of background on how this came together.
Go ahead, Rafa.
Thanks. I wanted to leave you the honor, but fine. I'm Rapha Stacks. I'm the founder of Fact Fund. It's a meme coin launchpad on Stacks Layer 2, Bitcoin. And I'm working on something to bring runes actually to Stacks that's going to upgrade the way we do it. And the way it came about, I saw Jack, spitting his thesis around. Sorry for the words, but my English, sometimes. But yeah, just spitting his thesis around runes and why he thinks they are currently dead. And I categorically disagree, and I think this is the object of this call.
Perfect. And I am Jacob Brown. I was a VC for 3 years at the Bitcoin Frontier Fund, early stage investor. But most importantly, nowadays, I run 2 podcasts. I run Built on Bitcoin, focused more on the tech side of Bitcoin and where Bitcoin's going. And then Bitcoin Yield, focused on how to earn yield on your Bitcoin safely. The classic question of where's the yield come from, bro? And then I also work at Bitflow, doing a bunch of stuff there. I wear many hats, but trying to help them be the best place to trade and earn with Bitcoin.
Amazing. Thank you guys for that. So I think maybe to get started before we actually tackle the is runes dead point, I think it might be interesting to ask you guys, was runes ever really alive, and did it ever need to exist? So do you think it's a good thing, even if you can't agree whether it's alive now? Do you think it was meant to exist, needed to exist, and valuable to the ecosystem having existed?
Yeah, let me jump off
Go
your
ahead.
offer because part of what spawned that video was I was incredibly bullish on runes when they first came out. And so I titled the video "Runes Are Dead" partially as clickbait, and then the video was like 8 minutes of me giving a nuanced take on like why I was bullish and why I've since changed my mind. So I was bullish initially, and this is back when I was a VC. So I was looking at things through like fundamentals of where the market could go. And there was like 3 or 4 main points, which is that Bitcoin is the biggest asset class. So why would you not want to have all the things built on Bitcoin, memes included, and just have it be not denominated in BTC? Like it's better money, so better memes. Okay, that kind of sounds good. And then through that, I think over the 18 months, I've looked at the market, and I think there's a lot of data points that we can get into on why I think that's not the case anymore. But yeah, I was initially bullish on Bitcoin-backed memes are good. That's going to be a big market. L1 is the most secure layer, and so you're going to see runes be like self-custody money, and then you're going to bridge up to Lightning and Stacks, etc., and transact there. I thought that was going to be the case. And
let me give you some time to breathe.
Go ahead and jump in.
Yeah, so I think everyone knows or can go up and see your video to understand, what was your point of view at that time. So relax. Mark is just asking the question of like, are runes, do runes have an existential, theme? Like, right? Or how did they come about? Right?
He asked, did runes ever have a chance, or were they ever a thing, right?
Or how did they come about in existence? And I think my answer actually is, so, like the idea of a fungible token on L1 is everybody was in awe, even before, the NFT, right? Standard, everybody was in awe. We saw that huge exuberance of the market, recognizing like this was valuable for the reason that you laid out at the time, right, in your video, which is essentially, as you're saying, like self-custody, sovereignty over your fungible tokens, backed by the security of Bitcoin. But just like to give a simpler answer in terms of from a technical point of view, while runes make sense from a technical point of view and are an upgrade to BRC20s because they use the UTXO model. In a sense, they are consuming the UTXO. When you spend a rune, you're consuming a UTXO which is deemed to bear an amount of runes, and you're sending an UTXO, an output on the other side, to the receiver of that runes. And at the same time, it's hybrid because you have an up return which is specifying, okay, I'm sending this much amount of runes. Here's the idea. Here's the amount, and the sort of property of the person who receives it is governed by who receives the UTXO itself, which makes it superior standard to something like BRC20, where it's just metadata. It's not using the UTXO. So in that sense, in the very physical mechanism of how runes work, they make more sense because they're more secured than just relying on the indexer, which verifies, okay, this data is on Bitcoin. More on top of it, you have an accounting using the UTXO for these runes. If that makes sense.
I have no rebuttal for that immediately.
Sure, let's hear it.
So okay, no rebuttal. So I guess we agree it's like it was a evolution of ordinals. It was an improvement, I guess. And I don't disagree with that, but I think where I would come at it is almost, yes, it might have been improvement, but it wasn't enough of an improvement to solve all the other critical flaws that ultimately left people unexcited by it. So I guess maybe I would love to hear what problems you think it was solving aside from that, or what the problems still are to this day that are unsolved, and if it can be improved, or if these problems are ultimately going to lead to it becoming, the Litecoin of, the Litecoin to Bitcoin, essentially.
If I can help lead on this one, Mark. So I think, Jake, you really framed it really well. I think your points were really accurate. Like stable coins, like for example, let's get into it. Like what, like one point after another, right? You thought that sovereign stable coins were a good thing, but because they were sovereign on L1, right? Can you just give us? Yeah, I think that was a good framing, right?
So I did initially think, and I will quickly double click on. I agree that the initial cool thing about runes and ordinals was look what Bitcoin can do that it couldn't do before. Like that was amazing, and I think ordinals are actually more unique here. Runes are interesting, BRC20s are interesting, but like the meta protocols idea is not that different from Counterparty a decade ago. So like I don't think it actually adds. I think runes might be a simpler standard, and that might have some value. But I agree with that angle that like it opened up the hatch of like look what Bitcoin could do, sending Bitcoin transactions. That's cool. On the token standard, yeah. So initially, my thinking was that you would want to have tokens on the L1 because you get all the benefits of Bitcoin, and that's going to be beneficial for self-custody, self-sovereignty, etc. I think for stablecoins, it's actually not that useful. One, you're tracking a dollar, and most stablecoins have a dollar somewhere in some bank. So if you look at where the market is, like they're all on Tether, they're all on Tron or Ethereum. Bitcoin-backed stables might be a thing, but you actually can't do it on runes without other trust assumptions. So like take Ducat, for example. Ducat's trying to do a loan protocol on the L1, but there's a network attached to it that you're trusting to keep these things safe. So you can't actually build a stable coin on the L1 without more trust assumptions. So that to me kills part of the biggest benefit to me on that way is it comes back to script is too limited. So you can do meme coins, but you can't really do stable coins.
Can I answer to this point? I think I agree with you actually that these are valid points that for a we're talking about a real asset, right? Backed stablecoin that's backed by treasuries or something that is a real world asset, right? A stablecoin type, because there's also like on-chain, over collateralized types of stablecoin, or and there's also like long short, the Bitcoin carry trade, something like USDH, right? Or Ethereum, which is also real world asset. So I agree with you, like runes is limited. You cannot issue issue more runes, and the protocol is designed in the way that the supply is fixed forever. One, and two, it's true that these things like real world assets, like these things which are controlled by an issuer, need root control in terms of for regulations. That was a very great point. Like you need to be able to freeze for these jurisdiction someone who's a hacker or someone who's like money laundering and all these things. But my counter is we're essentially finding something. And actually, that is interesting because you just mentioned Ducat, and in your video you didn't. And I think I agree with you. I think I don't know their trade-offs in details, but I think it's probably the case that they have another layer where they can do that on-chain sort of over collateralizing backing, or however the whatnot they're doing. My counter is this is a very nascent asset, and it's not selling. It's not working with the current compliance. And if we see in history, usually what we see is innovation, like technology coming in, and then the law of Caesar. Excuse me, Caesar, but don't put me in jail for that statement. Is usually going to adapt around what is working. This is not going to work, right? And it's not working because it cannot comply with the law of Caesar currently. But my thesis, and maybe you might find this thesis completely insane, but I can see a future where runes are capturing that value that Bitcoin L1 is providing, which is the security, right? The security of like owning my coins. Nobody is going to be able to put a gun to me, right? Make me an offer, and then China, or even China censoring Bitcoin, is going to reappear somewhere, right? So that's the value of Bitcoin. And when you were talking about, on top of it, you were disillusioned with the fact that runes are not going to be a interoperable system. Well, this goes against the fundamental of blockchains, which are going to scale in layers. A blockchain is going to be limited in just because of physical physics, and so to scale, you need a layer of blockchain, a little bit like the internet, which is layered. And my counterpoint is like, yeah, maybe it doesn't work for stablecoins, and who knows, with the Balaji's network state thesis gaining traction in the West, it might be the case that maybe not a stablecoin, but a currency, like a state currency, could be represented by a runes. Why? I'll tell you why. Because now what you have is when you trade, we're talking global trade. On the L1, it's not like meme coin traders, right? It's right now meme coin traders, but it's not working. It's working on Audin Fund, it's working on Binance, but on L1, what's working is like institutional money. The institutional money is going to come and capture that security. So what could runes represent? Maybe IOUs between, I don't know, Moscow and China. And here's why: because if I owe you, and I'm a nation state, and I trade in your currency, now I'm at your you can default on it, you can inflate it, you can use it as a weapon, right? You weaponize it against me if my behavior is not the one you want. Whereas here, if you give me runes, and the runes are not just going to be backed by consensus, they're also going to be backed by a layered architecture, meaning your runes are going to be on L2, backed by, yes, Bitcoin pools. And so if I have some runes and you owe me runes, and all of a sudden I'm unhappy with you, what I can do is I go to L2 and I dump into the pools, so to speak, right? Maybe it's going to be more elaborated than this. It's going to be more, even things on L1 themselves, things like Radfi.co, like things that are even more secured, could be a mechanism for trading for these entities. And yes, like meme coins on L1, degens, they want they want to be able to trade fast. They want they want access. It's not your normie is not going to trade on L1. So I agree with you. But SlowFi is very valuable. Fort Knox banks, they're slow. Like jewelry stocks, certificates, they're in vaults. All these things, and they move a ton of value.
All right, is it my turn? Let me jump in.
Should I take off my hoodie now?
if that the gloves are off. So let me go point by point. I agree with some of what you said, and I disagree with most of it. I think on the compliance angle, I agree with you in the sense that I do think nation states and governments do bend the knee and comply to assets of sufficient size. I think Bitcoin is the clearest example of that. And we're seeing governments do the opposite. They fight you, and then they try and be your best friend. I don't see any reason why that would be a rune, though. So, there's nothing else to really go there for me. I just don't see that even remotely possible. On interoperability, why would it would have to first be big enough? But I see no reason why it'd be big enough.
What do you mean?
Bitcoin is like 15 years in, and we're just now kind of getting there.
Yes.
Yes. There's no evidence in my mind that runes have any staying power to reach that level of bend the knee-ness.
Yes. And on that point, I think what I omitted in my video, because I did it really quickly and then I cut it, and my English is sometimes not as good and flows as well as yours, is that one of my counterpoint was, I think we're talking on different horizons. So I think this is my way of saying I agree with you, that,
it seems like we're not talking about different horizons. In 50 years, runes is dead.
Right. But you just said that you haven't seen a staying power, and that's your argument. That's your argument.
And I see no evidence that's going to change. So I look at Odin.fun, which kind of has a runes compatibility part of it. You can bridge down when a token comes off the bonding curve, it etches that token, and if you want to bridge down, you can. Except no one bridges down. And on the opposite side, yeah. It's kind of like it's weird wordplay here, because technically it's a rune, but not really, because 99% of the stuff that happens in Odin.fun is on ICP with a token standard that's on ICP that just happens to etch a corollary token on the L1. But I think that's an infinity scam to runes in my definition. It's an ICP token with a Bitcoin standard. It's not a rune.
What do you mean by how do you define
the majority of the people trade on runes makes it a rune.
Right.
Odin doesn't do that.
But listen, I'm not convinced with your argument, and sorry I had to jump here because with the horizon thing and the lack of evidence, it seems that this is a little personal attack, but take it friendly. VCs have a sort of longer horizon for determining whether something has lasting power or not. And it seems like, that's not your angle of analysis here. How can you predict how much of runes and ordinals are just 1 or 2 or 3 years max, right? So it's not even.
No.
No.
Well,
okay, wait. But it's runes itself. You cannot deny that it's it was born last year or 2 years ago, right? That's
yeah.
And then you're coming to a conclusion that this doesn't have lasting power in the future. I don't see how you do that. Right?
So let me just, because you've talked about this a lot when it comes to builders, and there is a nuance here, which is that VCs have to take sufficiently long time horizons to reach their outcomes when it comes to power law distributions for returns. In old VC, that's like a decade. You buy Facebook in 2007 at IPOs and whatever, and you get your returns. In crypto, because people are so token focused, that's shrunk to 2-3 years with token vesting, and so they'll get their returns fast. They were pumping like crazy during DeFi summer. Tokens are now down bad. Who knows what crypto VC looks like? Well, hold on. So my point though is that the the VC is not focused on long time horizons per se. They're focused on probability outcomes that 1 or 2 companies will return the fund, because it's a
Yes.
power law game. And so you have 100 investments, 2 are going to pay out most of your returns, 10 are going to give you, a 3x, and then a good chunk of them are going to die. On the opposite side, builders are the opposite. Founders have to take something that doesn't exist, will it into the future, and try and get that 1,000x return. So both are true, but for me, we're 18 months in the runes, and if I'm reading the tea leaves, I don't see any indication that fungible tokens on the L1, with how limited runes are, has any staying power in 5-10 years if I'm someone who's going to risk capital in that way.
But okay, I understand it was a nicely sort of expose of VCs and founders sort of time horizon, but you're forgetting about something. We're talking about asset class coming into existence. And that is beyond VC and founders. Bitcoin itself, we're talking about Bitcoin itself. As you said, it took 15 years for now to finally get institutional adoption, and even nation states and treasury companies and TradFi, essentially the Bitcoin becoming this, this thing that is going to infiltrate, not as a virus, more like as a mitochondria, the system, and back it and sort of repeg it to the price of energy, the price of the real economy, in a sense. And with also, so it's a completely new asset class. If you had talked to people at the beginning of Bitcoin, no, everyone in the normal mindset would have said, I don't see any future for Bitcoin. Exactly what you're saying. Exactly what you're saying, but for runes. Exactly what you're saying.
I understand your point. The problem is that it's so broad that it's not useful. Meaning, okay, let's say that's true for runes. It's also true for counterparty.
Yes.
It's also true for tap and track. It's also true for contour. It's also true for BRC20 2.0. It's also true for alkanes. Now, are you saying that you think all of those have equal potential? Are you saying that all of those are going to be the standard fungible token standard on Bitcoin? Because obviously that's a stupid statement.
Right. I agree with that. I don't know whether runes is this thing that may have staying power.
You're arguing for fungible token standards on Bitcoin, sure.
Yes.
We're arguing about runes specifically, but then you're using a broad definition for early asset class and so, dancing on graves too early. But I'm telling you,
you said it, Jake. You said it.
Alkanes is not going to be a thing. Just like
runes
isn't.
You said it. I think it's a question of probability. And it's a question of you have to take those risks. And as you said, 1 out of 10 or out, filtering out for max probability. But yes, I think that runes is the one, at least today, from my view, that could have the max probability. Why? Because I don't have as much. So it's just it's not as, I don't have as much depth as you in terms of analyzing the other competitors for the asset class. So I'm interested actually to learn on that front. But the intuition I have is it's just evolution. And the technology itself, when I'm using it, I see it uses Bitcoin itself. So you can you can do things like RadFi, which seems pretty damn interesting. This is an evolution of runes, of being able to, essentially not for degens, in my opinion, for larger whales who value that security, who there's an understanding or backing, long-term backing on layer 2s with real sort of ability to convert that runes into Bitcoin.
So I still think, I guess I somewhat agree. I still think you haven't, it sounds like you haven't done too much research on the other competing protocols. That's fine. I do think runes is the current leader. I agree with you on that. So out of just basic math, it has the most likelihood of staying power just based on its current lendiness. And Dog is carrying runes. Dog is a super active community. Shout out to all the Dog army. But when I look at something like RadFi, it's good for runes, meaning it's a step increase for runes trading. But in the broad ecosystem of trading tokens, it's still terrible.
It depends for whom. Again,
It's
I'm
terrible.
like
No, it's
SloFi.
terrible.
For
It's
whom?
terrible.
For whom?
Trade if you're on Solana and on Pump.fun, and that's how you're used to trading tokens, and you come
For
to
DGen
RadFi.
is terrible. Thank you, but like, who cares about
Well,
DGens? Like, I care.
No one's trading BTC for stables on RadFi.
Yet. You're judging
but again, like this is where, like, if we're talking about that use case, I'd much rather lean into like something like Bitflow, where you can go from L1 into a USDC-X on stacks.
Yes, but what use case? Be precise. Like, who is the target segment? It is true that today there's no institutional players using runes or sovereign tokens on L1. Does it mean that in the future it will still be true? I'm not sure about that. And you seem to be 100% sure.
I'm not. Well, let me be clear. Nothing I say is 100%, but I'm speaking in probabilities that this is the most likely outcome, which is why I made that video and changed my tune. But you make a point, and you said this earlier about interoperability in IOUs and nation states. I don't know why that's what is that solving? Meaning, when it comes to global settlement of trade, Bitcoin is already becoming that. And then the dollar is the other one. Meaning, like, foreign exchange and stablecoins back to the dollar is what's going to happen. And maybe we see India or Russia or China fight for like who gets to be the big dog as far as
this is a great question.
But between those two poles, there's nothing that's going to have any kind of stay between nation states or IOUs.
Hold on. Yes. So you're saying it's either stablecoins or Bitcoin, and I'm saying stablecoins like US dollar stablecoins.
Hold on. Yeah, exactly. The dollar is the important thing here, not stablecoins.
Right. But like, I'm saying, like, if you're Moscow, if you're China, you're already not buying treasuries, US treasuries. And if you're the US, you're not going to take renminbi. So what is left for you? Bitcoin. Okay, so Bitcoin, the problem with Bitcoin is it's so fucking scarce. So you don't want to trade that so much. You want to keep it as store value. So what's left for you? Why not a runes token that is backed on several layers where it might sound insane, but like, yeah, if you owe me, then runes makes it fixed supply. It makes it that it cannot be stolen, frozen, etc. All the properties that these institutional actors want to have, and it allows me as an instant to trust you as an instant.
Hold on. You said Bitcoin is scarce, and then you use fixed supply as a benefit. Why is the fixed supply a good thing here?
So yeah, that's it sounds paradoxical, but Bitcoin is the measurement of everything. So it's what is going to peg everything. I've been reading a little bit Lynn's book, and in the TradFi system, it's the dollar with the Fed system, and she describes all these strata and how they work. And the end user is not using what's being backed, right? Essentially an account with Fed, which is the equivalent of Bitcoin. They're using an IOU through a layered architecture. And I think this can be similar. Why is this an advantage for an entity to use runes instead of Bitcoin? But they don't have to give the Bitcoin, one. But their own sort of currency, runes currency, is backed by Bitcoin and their own nation state. And so the other nation state can actually take that sovereignly without the permission of the other one, and then extract value, which is Bitcoin. So instead of Bitcoin directly, an IOU of Bitcoin.
Okay, I don't want to go too deep on this topic. I don't find it super interesting, but I think IOUs specifically are better served on Ethereum or Solana. I don't think Bitcoin serves much use case here. It's also not true that just because you have a rune on Bitcoin that it's backed by Bitcoin, because the issuance.
That's not what I said. No, okay, it's backed by Bitcoin on layers. For example, on stacks. If you have a pool on Bitflow, it's backed by Bitcoin. You can sell your runes and get.
I understand, but the IOU is not tethered to Bitcoin specifically in any way. It's you can make it so one Bitcoin transaction mints you X supply, and has no tethering to BTC.
But as it's being backed by a real economy and real pools of money, at some point, it has real value.
Yeah,
So,
this goes back to
yeah,
this goes back to our original argument around compliance bends the knee to the most popular standard, but I don't think that's going to be true.
Okay,
Right.
here's I'll jump in with let's see if we can reroute this a little bit. So my real like concern with runes, like I really loved ordinals. I thought like, okay, this is like an actual, improvement. This is something you could do you couldn't do previously, and it's really like baked into the L1, which I liked. And then runes came along, and I was like, this is a mediocre improvement over ordinals. I think it's a little less exciting. Honestly, a lot of it didn't work as well, I thought, as ordinals, and I think that was a lack of being able to attract good developers. So I don't know what it ultimately could look like if they really built it out, but in my thinking, it was this is the middle ground. Like this is the kind of like the place where we're just kind of stopping for a moment before we ultimately solve this problem and come up with something super advanced. And maybe that's an AI that can just create these like super compressed, encrypted like uh inscriptions on chain directly, and it can interpret itself, and you can create into whatever it looks like. But I think if you're a VC, like Jake had said, and you are thinking on a 30-year time horizon, the chance that there isn't something like that comes out that is a sizable improvement over runes seems pretty low. And that was kind of my thinking. Would you agree with that, Rafa? Do you think that there won't be massive improvements over what they've done now, especially
So,
if there's an incentive for new capital to come in and fund these projects?
so the other thing that I would add, beyond the you know, use of runes for institutionals is intangible assets that that represents real value. That people don't only consume in reality assets, right? We consume like Bitcoin is the mother of them, right? It's like, why do you consume it, right? And actually it's more complicated, but the intangible assets and culture, for example, culture, music, cinema, like degen culture, some of these runes have a culture such as dog, like the epic airdrop that was done by its leader is pretty insane, and it goes hand in hand with the evolution of technology. That some of these things also can, like, props to Murad for the meme coin sort of theory of explosion of spirituality and the hodl culture and counter movement to the fiat, inflation thing. So I think that some of these sort of meme coins who become most valuable will understand that they need to be backed by the most secured chain, which is Bitcoin, in order to survive these cycles and attacks from the governments or the law of Caesars and so on. So I somewhat agree that 99% of meme coins will tend to zero, but some of these can become intangible assets. And with the explosion of AI, what is also likely to happen is that these things can find a way to monetize itself in an accelerated way. And I think that some leaders in the space, such as Trevor Owens being a big one with Pizza Ninjas, are leading the path on that front.
So my take on your question is, I agree with you. I think that runes felt like a stepping stone. They were cool. BRC20 broke the mold for fungible tokens on the L1, but they were hella hard to use. It took 2 transactions just to move them from account to account. Runes made that atomic, and you could do that in 1 transaction. Big increase. But as Rafa said earlier, when it comes to fixed supply, that's one thing that you can't change on runes. Like, you etch a rune and it has a supply, and so you can't do something as simple as mint and burn for a fungible token. Like, people bridge in, dollars are created, you transact them. You can't change supply.
Incorrect. You can do it on layer 2. You can do it on layer 2.
Exactly. So if you do it on layer 2,
backed by runes,
why not just use a layer 2 standard? Which goes back to my main point, and I agree with you, is that the reason runes is not going to work is because the token standard doesn't work as a token standard. It's too limited. And so it's a good stepping stone. It kind of like played with the edge cases of what's on the L1. The end game for this is probably like a ZK roll up on the L1 that settles on the L1, but is a smart contract L2 technically, which means, in my mind, L1 token standards have no utility because they're going to end up as a SIP10 token or a token on an EVM rollup. That's the end game for Bitcoin-backed tokens, where they feel Bitcoin-backed because they verify on Bitcoin, but they're not a meta protocol and they're not a rune, definitely.
Let me tell you what the utility is.
They're not a fungible
The
token
utility
on the L1.
is what you said you were disillusioned about, which is the interoperability of the token itself. Why is it interoperable? Because all chains will come back to Bitcoin. That's what we're seeing, be it Odin or Stacks or Spark, right? All chains are coming back to Bitcoin for the security. And the utility of runes is being able to expand my SIP10 token to where the users are currently through that repeg, through that mother of connection, which is on Bitcoin Layer 1. So if I do it directly at the L2 level, you can imagine that as well, but it feels less sort of like large operators will have max security, and that's on L1, and then they will spread the token on different layer 2s through that base layer, right? You have the gold that is in Fort Knox. That's the max security, and then it backs whatever. Like it then expands. If you could expand gold, which you cannot, but Bitcoin you can. It expands then to places which are less secured but much more convenient.
It doesn't work. It doesn't work though. It doesn't work. Meaning, you either start on the L1 as an issuance layer, like runes, and then you lose all the benefits of mint and burn and these kind of things, or you start on an L2 where you get the expressivity, and then you can bridge down, but then you never escape the lowest level of trust assumption is the L2. So the L2 is the end game.
You keep on saying that it's not possible to issue more, but actually that even runes you can issue more by issuing a new runes token.
Exactly.
So you can.
No, that doesn't work.
Why? Why?
Because now if you're going to track what's the base truth, you're going to have 7 tether tokens every time there's a daily issuance.
So
what are we talking about?
So yes, you could have, like, not every asset is a meme coin. Like, you can have IOUs which are go have a life cycle. You can have this is IOU between this entity and that other entity, and now I need another IOU like a bond. Bonds are like this.
Right, but again, the issue here is because runes and script is so limited. Let's say that Tether wants to come to runes, and they need to have a daily issuance to track the current supply of Tether on the chain. They'll have to do a daily etching, and then they have an off-chain network, a ledger, to say what's true on Tether, not on runes.
Yeah, but that's the thing, right? So it's like, I agree with you that doesn't work, but doesn't mean that other things cannot work. Like, bonds are, each time you have a new issuance of bonds. Like, this is happening all the time. Every, like, a bond trader.
I know, but you can't gather them into one entity. You have a central other entity.
But that's already the case for these assets. They're issued by one entity, but they are all different assets. And
but you can you can write a smart contract to track all that in one global state. You can't on runes.
But it doesn't matter. So first off, like, you seem to think that, and that's a very interesting point, and I'm not entirely sure. I would like for you to tell me, why do you think that a layer 2 asset is disconnected from the runes? Like, you employed that term a little critic, right? Of like, it's an affinity scam, but like, for example, on Stacks. Currently, we've demonstrated that you cannot mint L2 runes without depositing real runes on L1, and that's governed by code. So why is that an affinity scam? I'm curious to dig into your understanding of this.
I want to make sure I understand your point. Are you speaking specifically on Odin or something else?
So Yeah, for example, Odin. Let's try to understand that, because I'm
Well,
I want to learn
in
from you.
yeah, because in the idea initially for runes in my mind was to have it be the base layer of truth, and then you would bridge up to do things. Still possible. Odin takes the opposite stance, which is that every time you use Odin, you're starting on ICP with CKBTC, which you bridge in, which Bitcoin has no concept of, and you're trusting their bridge. So you've already taken on many layers of trust assumptions. And 99% of transaction volume on Odin is happening on ICP, even though, like I said, when you come off the bonding curve, two things happen. LP goes to an ICP smart contract, which opens up the pool and you can trade. And they have lots of easy ways with, session keys and whatever, where you just hit buttons. And you have to sign in your wallet. It just trades. Cool, great UX. If you want to, you can bridge down to the L1 through their bridge and go trade on Magic Eden. But the reason I say it's an affinity scam is because no one does that. So it's like you have a door that goes to runes that's like locked from the inside, and no one cares to go on it, and it's like cobwebbed and dusty, and no one cares. And so it's like you say you're a rune, but they're really Bitcoin memes by association on ICP. There's no rune connection. No one's using them as runes. They're not runes.
Yeah. So I think that in the case of Odin, they're meeting the users where they want the user experience to be.
Because
in terms
rune
of
sucks. Because rune
in terms of like for degens. I mean, if you are storing gold, you're not going to store it on ICP. You're going to store it in a Fort Knox. Like, you keep on repeating this, but like, and not everything is memes. Like, yeah. So let's just go back.
But you also can't do stables on the L1. Like, you can't do a robust stablecoin protocol.
You can do bonds. I'm telling you, bonds are not just they're like each individual asset is issued independently of the other. So wait a second. Let's go back to Odin. So I think that what matters for degens is the opposite of what you said, which is you said, meme coins backed by Bitcoin is ridiculous. Nobody wants to exchange the most valuable, appreciating in human history asset, which is Bitcoin, against something that is going to go to zero with a 99.99% probability. And that is true. However, degens, when they make a profit, they want to store it back in Bitcoin for the same reasons. So this is what Odin is doing, one. And two, if you back your meme coin against Bitcoin in a pool, if the valuating asset, which is Bitcoin, decreases, it's going to decrease less than a shitcoin like Solana. And therefore, if you back it by Solana, your assets are going to decrease much faster, which is exactly what we're seeing. We're seeing that Solana meme coins are just attention tokens that, and in this case, I would definitely use affinity scam more than in the case of Odin, in my opinion, because there is this dimension that you seem to completely ignore, which is community, explosion of spirituality, things that can be consumed, intangible shares of intangible assets. And the last point you're making is that since nobody's coming back to the chain, it's an affinity scam. But no, people are coming back to the chain. A lot of them, they're not coming back with runes, I agree with you, but they're coming back with Bitcoin. Right. They're coming back with Bitcoin in some cases when they're in profit, or when they lost money and they want the Bitcoin back.
Right. So you're making
that is not a scam. Like, they're delivering on their promise. Although the trade-offs are...
No, they're not. They're not delivering on their promise for runes as a standard. They're delivering on their promise that people will trade meme coins that say they're Bitcoin memes into Bitcoin. But that could happen on Stacks, which has nothing to do with an L1 standard. That can happen on Solana, which has nothing to do with an L1 standard. So my point is that if we're talking about runes as a token standard, versus now you're making the point that people will fund profits in BTC. I agree with you.
Yeah, me too.
But ICP and Odin has nothing to do with that.
I agree with you.
Sorry, let me try to drive this in like a slightly different direction, which I think is interesting that we haven't thought about. Is, do we even want an L1 standard that is unproven and people to essentially clog up the L1? I think there are only a few times in Bitcoin history where I've been like, we might be fucked right now. And one of those times was when runes was popping off and we were looking at like $100 transaction fees on Bitcoin. I was like, no one's going to use Bitcoin to do anything if fees go up to $100. And so there is like a problem that if you actually do have massive success with this, you break Bitcoin completely and make it unusable. And I don't think they've been super responsible with treating a $1 trillion asset with enough care that they can potentially ruin everything. And so, like, is it even, is the risk worth it? Would be my question.
I can start. I think we all agree here. Like, we do want more experimentation on Bitcoin, and something not talked about a lot is like at the end of the day, the L1 is for the rich, because right now Bitcoin is subsidized by mining heavily. Transaction fees are at all-time lows, and so the only future, if Bitcoin is going to survive at 100 years, is exactly that we had for like those 2-month periods. That's the only future. Now, whether it's Michael Saylor doing 2 transactions a week and then like a bunch of rollups paying for compressed data to put onto the chain and have it be, a million people on a rollup, that is possible. Maybe it's something else. Maybe it's Arc or Lightning or something else. If that happens, which kind of makes my point, is like, does an L1 stand on the L1 make sense for anything besides like the highest value, like Bitcoin at 2 million per coin or whatever? So like, yeah, I agree with you. We need more experimentation, so that's good. Like, I want people to try things and see if they work. But at the same time, like, the only future is it has to be expensive. So we have to figure out how to make that work. So when it comes to fungible token standards, this is where Rafa's point could be true over time, which is that because you get these security benefits of the L1, you're willing to pay $100 for a fee if you're settling $100,000 or whatever it is. Do I still think that's going to be an L1 fungible token standard? Probably not. I think it's just going to be BTC, but that's my view.
Yeah, sorry guys, I was hearing like an alarm. I don't know if you guys heard it.
No. I was dropping too much bangers.
Yeah.
Anyways,
I started getting some feedback from your mic, and now you're super loud for some reason, but that's okay.
oh. Am I better now? Like, am I?
I mean, yeah, there's no feedback. You're just very loud, but that's okay. I can fix that after. But yeah, I do think that's interesting, Jake. Like, no one thinks about, I think the long term thinking about it of like, this is where the rich will do secure transactions. I think not a lot of people really are thinking about that. And I think that's super important to be thinking about. And in the, like, us figuring out how do we actually pull all these worlds together so Bitcoin is usable for everyone, I do think that that's like a super important point. And that if you want all roads to lead back to Bitcoin, you have to have something that allows all these things to happen in a secured way where you're not hitting the main chain. And maybe that is why Ordinal's NFTs, like, I'm more bullish on Ordinal's NFTs than anything, because I'm like, that was a lot of blocks, but like, you guys, that's gonna be expensive as hell to do someday. So people are gonna be like, that's pretty cool. I have this NFT that would cost me $1 million to put on there right now, and that's something. It was early.
100%.
Yeah.
Guys, can you hear me better now?
Yeah. You're
you're
a little
good.
quiet now, but it's fine. You'll be good.
Okay. I was listening an alarm for like really loud and sorry. So but I heard your point. I think your point is, we need activity on L1 for Bitcoin to survive. Coinbase going to zero, and L1 is selling security to the powerful, and that's where the value is going to be changed, like high value, low frequency type of transactions, including perhaps like some of these very valuable cultural assets that have already emerged, and perhaps even Rune as a means of like issuing bonds between institutions, but that's a controversial view, of course. But to your point, like miners are being subsidized by the system itself, right? By the math, like included into the formula, like a very elegant formula of how Bitcoin issuance works, and that issuance goes to zero. But I think that if consensually entities understand that Bitcoin is so valuable, it could make sense for a federation of these entities holding the Bitcoin to continue to subsidize the security of Bitcoin, perhaps with other assets, and even perhaps with rooms. But that's just a thought for you to have in mind. Like, perhaps we can still have low frequency, high value, not and if the fee is proportional to the value, you can imagine that fee, if as Bitcoin value increases and people use it for high value, then linearly the fee to retribute the miners is going to also.
All right, real quick, I do just want to. You mentioned bonds a few times. I just want to. I will say I agree that that's possible that they'll come to the L1, given the security benefits. So this becomes like a meta point that like runes in my mind is not expressive enough for that to ever work, but the idea could work as a meta protocol. It just can't be on runes. So it's like both are true. Like a better fungible token set on the L1 could solve high value, low frequency behavior on the L1. It just can't be on runes.
So I agree and I disagree, because I think that a hybrid of runes plus a layer 2 can be expressive enough to cater for that use.
Okay. Fair enough. Mark, do you want to bring us to a close with the last 10 minutes?
Yes, absolutely. So I think maybe we could go a little more into Rafa's point, which I think is, community is really valuable. I think Trevor has done a really good job, and Leonidas, of getting people excited about runes and bringing communities together who otherwise wouldn't have come together. So I guess I would love to hear like how important you guys think that is to the success of the project, and if you think that, just having leadership that is that involved might be enough to allow them to beat out competitors who might actually have better technology and have a system that makes more sense.
Do you want to finish it and maybe let me go first? Up to you.
Go ahead.
Awesome. Because I want to leave you the honor. I think you're best position to finish it off. But to your question, Mark, it's an excellent question, and I think the margin between technology succeeding and technology failing is very thin. It's a very thin layer, and having leaders such as you mentioned them and others, I can mention someone like Albert from the Bitcoin Power Lab, which has had a huge impact on me, and a number of semi-successful, like seed and so on, companies who have built this technology has been great. And I think, yeah, this is a much, like, it's an important, like having the leaders, including people like Balaji, like people who are sharing thoughts for the future. And I want to give them a message to try and sort of help the builders, help the braves, but at the same time, in an inclusive way, right? We want to fight for peace in the world, not for division. And we as a human group, we strive on coordination. Like something like AI requires, I think, like things all over the world, that if the third world war was to break, some of these things would be not as great. They would not be as great, and they would evolve less. That's my final.
Excellent. Yeah, so to close it out, I think your question on community is a good one, especially when it comes to runes, because the most active community in runes is Dog, and they've been showing up for like 18 months nonstop on the timeline the entire time, like insane. So yeah, the way I view this is like, I think there's two things that kind of are important for a project to win. One is great product, and that can be irrespective of community. It's like you come as an individual, you use the product, you have a good experience. Okay, great. And then the second one is this sense of community where you get something where you feel like a collective part of a mission, you have a good time, the vibes are good. And that's where I think Dog has done well. I actually think that this is where I don't think I think the tech gets in the way here, meaning that runes, because of how limited they are, make it hard to be a really strong community, because you can't do so many things you can do on an L2 when it comes to token gating. These, like, you have to use all these different kind of tools. So yeah, in this one, I still think like, will meta protocols take off in the future? Maybe. I'm open to it. But runes, and especially, I mean, we haven't talked about this, but like Casey is the creator of runes, And he has a very specific view of how he views a fungible token standard. Meaning, he's been very vocal about things like, I don't want to introduce MEV on the L1. I don't want to have certain types of pools. And so he's hamstringed the protocol by design to make it what he thinks should be a gambling protocol, a more peer casino, whatever. Fine. So yeah, all to say, like, I think community is important. I think a better the tech being easier to use makes the community easier to connect with, and so bringing a full circle, like runes and dog specifically has done great. I think runes get in the way, but meta protocols as an idea, maybe they'll happen in the future.
That's unfair. It's unfair of Kozi. I'm sorry to say, but the question was more about leadership, etc. And so I have to answer. Okay. Sorry, but like, yeah, I will say just in one sentence that I disagree because it seems that you are restricting runes to the L1. But just like Bitcoin is not restricted to the L1. Bitcoin is now, as we see, moving on to other layers. And so my counter to this is that a hybrid of L2 and L1 can cater for different use cases. And I think that Rodemar's approach of a peer-to-peer is great without MEV, although that's controversial. I'm in favor of Octave. But on L1, larger broker-dealers of runes, larger people who or entities who value that security are going to trade, and in a more peer-to-peer, things like Rapha is interesting, and they will give a signal for L2. If a nation state is issuing too many or too much debt, then that currency on L2 will be devalued, and citizens of that nation state are going to struggle to go on vacation because it's going to be more expensive.
Well, I mean, to be clear, I wish you the best. I hope you win. I hope I'd be if I'm wrong, I'll say I'm wrong. There's a bet out there that if dog goes to $1 billion, I'll wear a dog suit and apologize on the timeline. But I'm kind of nuanced here. Like, I do want all builders to win. At the same time, I remember I was at a Bitcoin conference and there was someone there who was raging on Lightning, and they were mad because they felt like Lightning was so dead, but still had so much mind share that you had all this brain power going into a defunct protocol. Now, I have thoughts on Lightning that don't match his, but I understand his sentiment. And I feel the same way about runes, which is that luckily there's not that many builders on it currently. That's my view. But I would hope that people overall go to rollups or stacks or something else, and use that to build more expressive features that actually solve bigger use cases than trying to fit the square rune box into the circle hole and make it work. But that's my view.
Jake, just even now with runes, and dog is $100+ million market cap.
Yep.
If this was to find a use case that meets users in a really compelling way, more than anywhere else, that alone, bringing that with a potential of $1 billion in market cap on Stack, it's already good for Stack, right? It's
but again,
win-win.
Yeah, I kind of see this point. Like, it's good for stacks. You're trying to bridge this gap between an L1 community and the L2 that you love dearest. But cool, okay, that makes stacks in the L1. Like, that particular use case helps stacks somewhat. It doesn't mean runes is like a great interoperability layer. To me it makes the case that stacks is probably a pretty good place to build on full stop, and you should just build on SIP10. Like, this is a broader point.
But
so
show me a meme coin that is $100 million on Stack.
No, it doesn't exist.
That's runes. Runes.
No, I agree, but I also think that even if DOG goes to $1 billion, I'll be happy for them. But relative to the size of Bitcoin, Doge is 20-something billion. Dog with hat is bigger than dog. So there's so many memes that are just in my mind, it's still an L if dog only goes to 1 billion.
Yeah. I agree with that. But like, yeah.
Like Bitcoin's so big that this thesis should be big as fuck, but it's not. And you have 72 other meme coins bigger than dog on random chains.
I forgot a point, but I think that yeah, I forgot. Yeah, what's your point here? Just try and remember. Well, like, can you summarize that point?
Well, the previous point is that I do think that, you know, if you want to try and bridge up to Stacks and get that community, like that's good. You know, as a Stacks builder, that's what you should do. You're trying to find engaged parties that you can bring onto the L2. But once you get them there, and if they stay there, I do think you end up like Odin, which is that runes becomes an afterthought. It's not that interesting. It's the SIP 10 and the expressivity that makes it really interesting. So let's sell that.
What I'm selling is the ability to bridge with sovereignty at its core. When I'm
I understand.
selling,
No,
right.
yeah, I understand. I do think that has
I'm
no.
not only selling to stackers. I'm also selling to rune dealers, like runes large holders. They don't want the trade-offs of a bridge that that could, you know, be like that. Essentially, it's just a superior technology. It's just it's backed by math rather than by a federation of people. So I'm selling this to the runes holder, not to the stacks benefits. Obviously, there's the stack benefits for the users who are catered with, not only faster trading, cheaper, etc., but modularity. We know that stacks, you know, you can do lending and borrowing, etc. And in the same vein that you were saying that, you know, for Lightning, I'm happy that Lightning exists as an alternative at the cash point, right? Because it's so fast. If you were to wait for fast seconds instead with you know stacks, these are different it caters for different use cases, and it makes the Bitcoin itself to expand. The name of the game is expansion. The name of the game is expansion in however use cases that are going to work. And the fact that there are things that don't work with runes doesn't mean that runes will not work with anything, is my major point.
Yeah, and like I said, I wish you the best. But at the end of the day, until we get Bitcoin verifying L2 transactions, which this gets nuanced, and I don't want to open this can of worms, but like when it comes to stacks, for example, we keep saying 100% Bitcoin finality, but it's like it's kind of true. It's kind of true because you do have it looking backwards, but at the chain tip, if someone wants to attack the network, they could still censor you. So like once you bridge in, you lose a bunch of trust assumptions being on stacks that you're used to on the L1. So it's like it gets very nuanced here. But I get your sentiment, and I think it's a unique angle that should be tried and see if it works.
Let me just precise the nuance here. I'm talking about depositing
No,
Bitcoin or runes. Like if I'm going through a bridge and I'm trusting the federation to verify the wallet where it's standing, verifying the amount, and then custodying the entire pot for all the users in one place. Right?
No, I understand.
Here,
I understand your point.
Nuance. Like it's kind of huge because when you're depositing, it's code that is so on the sort of peg out, and obviously you're talking about as you said,
the stacks consensus. Yeah.
Right, going back down, but you could see things like you know, self-wrap Bitcoin on stacks, and I think the core engineers are working on this, which is best in class. It's like you're going to, instead of trusting a I think, which is in my opinion best in class bridge as BTC bridge, you could do something else that is a self-wrapped Bitcoin, and maybe you trust a different entity or different federation for bridging it back to Bitcoin. But if at any point sort of like it's hacked on the L2, you know, you cannot mint an infinite amount of tokens and deplete the pools on the L2. That is, and also on the L1, you would have to go one by one for all these self-wrapped assets, which also is like it's an upgrade. It's an upgrade. And what they've done also, even with the SBTC, is an upgrade if you go into the nuance. But there's a saying that my grandma was saying, and in French is like, to the impossible, nobody is due. You're asking the impossible here. we cannot change Bitcoin without, Bitcoin consensus, without something like, I talk about this like, like the same thing that was done with Segwit, right? Like the users self-imposed a deadline and they went through with the upgrade. They completely bypassed the core, Bitcoin core, and that was for the better. And I think at some point it might be a good idea to revisit that route for things like Opcat, because Opcat solves exactly what you're saying: the ability to self-wrap and also self-unwrap, right? With a mathematical proof, not human trust, and that is the unlock for, in my opinion, expanding the Bitcoin everywhere.
All right. Well, Mark, I'll let you close it out. I want to say I wish you the best, Rafa. I'll be watching from the sidelines, and just to shill for you, if you're hearing this and you want to check out Bridging Runes to Stacks, check out Runes Capsule. On the bridging side, it's pretty unique with minimized trust. So yeah, go check it out.
Yep,
Yes,
and I think that's
I have to counter this.
okay.
Like, if you want analysis for like Bitcoin yield in terms of nuanced explanation, please go to Bitcoin yield or even the Bitcoin pod on Twitter, and that is the source of like leading edge with the best questions with Jake Blockchain.
There you go. You guys are doing my
Well,
job
thank you.
for me. But no, I think, like, honestly, I'm very excited to see L1 and L2 come together. I think they've been very much like at each other's throats and kind of like seeing each other as competitive products. But I think some level you're going to need them to work together. And I think all roads should eventually lead to L2. And I think all these other projects should think about that from first principles when they're launching, of how can we make this more useful instead of bridging to Solana to go do that. If they can keep it on inside the Bitcoin ecosystem, I think that's going to be good for all of us. So I think these conversations are great, and I really enjoyed just getting to hear you guys debate it a little bit. I think this is really valuable to people who it can be a little difficult to understand what all the nuances are and how people are thinking about this, both from a builder perspective and from an investor perspective. I think it's super valuable. So thank you guys for being here. I really appreciate it. And maybe in a year or two from now we'll do another one and see where the market's at and see what we're thinking. But until then, definitely go check out both of their projects. And I'll put all the links in the description, and maybe we'll throw in the original videos they did, so you guys can kind of see how this kicked off. But if you guys have opinions or thoughts, please just comment, and I'm sure Rafa will argue with you in the comments. And you guys have a good time. Thank you guys so much. I appreciate it, and we will be back soon with another episode.